The 2023 housing market continues to surprise me. Even with inventory up year over year, interest rates up considerably from last year, and housing affordability sitting at near record lows, there are still a ton of buyers out there looking to purchase homes, which is creating this super competitive housing market out there, driving home prices higher. Now, if you're watching this video going, Jeb, what are you talking about? There's tons of property on the market, no one's buying it. Then I'd ask you to remember that all real estate is local. I'm located here in Southern California, and we're in a very competitive market at the moment. So if you're in a competitive market and you're looking to buy a home, how do you set yourself apart from other buyers out there in the market? Well, that's actually what we're going to dive into in today's video. We're going to talk about what I'm seeing out there in writing offers. There's a couple of things that I've seen in the last couple offers that I've written that I've never seen in my 20-year career, at least not as often as I'm seeing it right now. So I want to talk about what I'm seeing out there and how you can use what I'm seeing in order to put yourself in a better position if you're considering buying a home in 2023. Now, before we dive into that, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. Not only does it help support the channel, it also helps the YouTube algorithm push the video out to more people like you who like this type of content. And also feel free to subscribe to the channel to stay updated on everything real estate related. Now, just a moment ago, I mentioned seeing some things in this market that aren't really that common when it comes to buying a house. And it's something that I've ran across twice in just the past weekend when writing offers for buyers. And it's something that agents are putting in the MLS, in the listing supplements, essentially calling it offer guidelines. And what this is it's more or less the structure that the listing agent and their client want to see from buyers making offers on properties. Now, the reason agents are doing this is because they're getting a lot of questions around offers. They're expecting multiple offers. They're expecting people to call and ask a bunch of questions. So they're trying to address it up front by having this offer guideline submitted into the multiple listing service that you can download and essentially plan your offer around it. Well, the reason this isn't very common is because normally a seller wouldn't know what type of activity they were going to get on a property. Yeah, they might think they have a nice house. Yeah, they think they've priced it correctly, so they're going to get some activity, but rarely are sellers expecting to be flooded with offers. And that's exactly what we've seen with the last couple of offers that I've written. Now, understand, in a buyer's market, you wouldn't see these out there, right? Because in those cases, a seller would just be happy to receive an offer in those cases and wouldn't really be concerned with setting proper guidelines and proper expectations. They would just be happy to be getting an offer on their property. Well, we're in a seller's market here in Orange County where I'm located, where sellers are still driving the bus, if you will, with regards to selling their property. So they have the leverage. So they can more or less set guidelines that they want to see in offers in order to more or less set a precedent about their expectations. And I'll be honest, this reminds me a lot of spring of 2022. Last year, when we entered the market with the lowest level of inventory that we had ever seen on record, we had interest rates still sitting in the low 3% range. And so we had a lot of buyers vying for the same properties and in turn driving those prices up. But as we saw interest rates increase and we saw inventory increase, the housing market slowed down, and it primarily had to do with housing affordability, just less people out there being able to purchase those homes. But as we entered the fall market, we actually saw inventory start to stall because sellers weren't putting their homes on the market because they were more or less locked into their homes due to the low interest rates they received when they bought their properties or refinanced last year. And in turn, this kept property from coming to the market. Well, we entered this year with the second lowest level of inventory that we had seen on the market. In fact, here in Orange County, California, where I'm sitting today, our inventory as I speak at the moment is at the lowest level we've seen since April of last year. So we don't have a lot of homes on the market. So if you're sitting currently in a market that has a ton of excess inventory, homes just sitting on the market, days on the market are going up, and no one is buying them, then this video is not for you. This video is for those out there sitting in competitive markets where inventory continues to be a problem and you're still seeing a lot of buyer demand out there. So with that said, I actually want to go over two of the offer guidelines. So I actually printed them out of the MLS. I blurred out the pertinent information that pertained to the seller or any names or anything related to the property, so that wasn't giving out any information. But I want to go over this information, and then we'll talk about some things that you can do based on this information in order to set yourself apart when you're making offers on properties. So the first one we're going to talk about was a property that we wrote an offer in about a week ago. This property was located in the North Tustin area of Orange County, so a great area. Both of these properties needed a lot of work. Now, they're not necessarily flip properties, but they're properties that you need to put in some TLC. They needed some love, if you will, in order to make them updated. Well, as I mentioned, the seller put together guidelines, and this one starts with the headline, tips and suggestions for basically writing an offer on property X. So as you can see from this example, this property is currently vacant, so they're asking for a shorter term escrow. I would say the normal escrow when buying a property is around 30 days, at least here in Southern California. So what they're asking is for the shortest escrow that you can possibly do, because the property's sitting vacant, because they're continuing to have to pay things like utilities and property taxes and that sort of thing. So they're looking to sell the property as quickly as possible. They're also asking for a 3% earnest money deposit. Now, we've talked about this in several videos in the past. Here in the state of California, at least in Southern California, this is very, very common. So 3% isn't out of the norm. So if you're buying $1 million home, in theory, they're asking for a $30,000 earnest money deposit to go into escrow to secure that property. Now, as many of you guys know, this is 100% refundable if you decide to back out of the property, but it does require that money up front once your property is under contract, which basically means that you have to have the money liquid. If it's in stocks or bonds or whatever, you have to be able to liquidate those in order to get that money to put it into the escrow account. The next thing they're asking for is shortened and or waived contingency. So they're basically saying we'd prefer to have the contingencies waived when you're buying this property. Now, if you're watching this going, what is a contingency? Contingencies are things like getting your loan approved, getting an appraisal, getting a home inspection. If the property has an HOA, getting HOA docs, reviewing the seller disclosures. It's basically your due diligence period to make sure it's the property that you want to move forward with. Now, a year ago, people were buying properties and waiving all contingencies when buying that property, which I'll go out on a limb and say is absolutely crazy. I don't think there's ever a world in which you should waive all contingencies when buying a property. You should definitely have something in the bag that gives you an out if you're there looking at the property, something comes up or what have you. But last year, people were waiving them. And as we saw the market change, we saw that change along with the market. But here we are again, sitting with low inventory, and sellers and agents are once again looking for buyers to possibly waive those contingencies. But nevertheless, if you're not somebody that's willing to waive them, they're asking you to shorten them, which I think is a completely normal request, and something I often do when writing offers for buyers is shortening those contingencies, just trying to make the offer look a bit more competitive. Now, just a moment ago, I mentioned that the property was a little bit older. It was a bit of a fixer. Well, they go on to say here that the property is being sold as is, and that no repairs will be taken into consideration. So they're basically saying if you find anything in the home inspection or when you're walking through the property that is an issue, that they're not going to fix it. So as a buyer looking to buy a property like this, you have to 100% be sure that you're ready to take on a project or potentially deal with issues, because it's not likely that the seller is willing to negotiate. So that's just one property here in Orange County. We're going to talk about the second one here in just a moment. But remember, my market is 3.3 million people. At the time of this video, we have just over 2,100 homes on the market. So there's not a lot of inventory, and we have buyers out there competing against one another to buy these homes. And that's why you're seeing essentially these offer guidelines. Now, I don't necessarily agree with some of the things that they're asking here, but because we still have too many people chasing too few goods, in this case, too many buyers chasing not enough properties, the sellers still have the upper hand in negotiation in many markets out there. Now, the second one we're going to look at here starts pretty clearly. No late offers accepted. So they've basically given an offer deadline that you have to have your offer in by this expected time. Anytime after that, we're not considering your offer. Now, this is pretty normal for the most part, but oftentimes there's some sort of a grace period. But what they're expecting here is probably a multiple offer situation. This one has been on the market for a couple of days, and they're not reviewing offers for at least another week, which means they're going to have a ton of activity on this property. And that's exactly why they've created this offer guideline. But as you can see, the very first thing I highlighted there shows that this property is also being sold as is, and that no repairs or credits will be granted. So basically, once again, saying that if you find any issues in this property, it's up to you as the buyer to deal with them because the seller isn't willing to negotiate. They go on to also say that they want the escrow to be 30 days. They're also asking for an earnest money deposit of 3%, which we mentioned earlier. And now you might be watching this video going saying, why are they asking for 3%? Why aren't they asking for, say, 5%? Well, it has to do with the residential purchase agreement here in the state of California, where it actually discusses the breach of contract, which more or less says that the seller can't take more than 3% from the buyer. So what they're saying here is that they want to max it out at 3% so that if something does happen with the buyer after contingencies are removed, that the seller can take the max amount possible. The next couple of lines below are basically shortening contingency periods in the contract. So understand, here in the state of California, we have 17 days to basically do all of the contingencies that are mentioned there. In this example, they're asking for those to be reduced from 17 days to 12 days for the appraisal and the loan, and to be reduced to 5 days for everything else. And the reason they do this is because the seller wants to make sure they have a firm buyer as quickly as possible. So by shortening those contingency periods, the buyer has to make a decision sooner than later whether or not they're moving forward with the property. And in turn, not tying it up just in case they're not wanting to move forward. And the last thing they mention, once again, so this is the second time they mention because they want to be clear about it, that the property is being sold as is. Now I know after watching this and listening to what I just said about the expectations there, that you can feel bad as a buyer. Maybe you're not able to do the things that the seller is requesting, therefore you feel like you don't have a chance in this market. I know how that can feel, and I don't want you to think that you don't have a chance. This video is not about that. This video is just showing you what some sellers out there are expecting so that you can use that in order to write better offers if you're considering buying a house in this market. Now understand, this isn't a push to get you to buy a house, but rather a guide if you are planning on buying a house, some things that you can do in order to make your offer look a bit more attractive. And one thing I want to mention once again, real estate is local. So what I'm seeing here might not be what you're seeing in your market. So just make sure you're working with an agent in your market that understands the market, that understands supply and demand, and can answer the same questions for you that I'm answering in this video. Now, if you're watching this saying, I don't have that agent, I need that agent. Well, if you need that person, I put a link in the description below to connect you with a top agent like myself anywhere in the country that can guide you through that process. So if you need that pro, do me a favor and check that link. So the question is, what do you need to do in order to set yourself apart from the other offers out there, from the competition, if you will? Well, you can only do what you can do. So I wouldn't get caught up in doing things that you can't do. For example, if you're not in a position for whatever reason to put the 3% deposit down, then you just do what you can do. But these are the guidelines that if I were writing an offer for a buyer, which in this case I did, I wrote 2 different offers for the same buyer in this case. So the same buyer was actually interested in both of these properties. So imagine being that buyer and seeing these offer guidelines twice and me telling them this isn't common. They're probably like, Jeb, you're crazy. I've seen it twice now. And that's exactly why I wanted to do this video. But if I were talking to you as a buyer right now, I would tell you to go in with a price to start with that you're not going to have regrets about. What do I mean by that? Go in with a price that you feel strongly about, that if your offer doesn't get accepted, you're okay with it, but also a price that you're not going to regret later if your offer does get accepted. And the reason I say that is because in this market, you have to go in with the expectation that you might not actually receive a counteroffer, that they might just take the best offer off the top, which I've actually seen in a few of the last offers that I've written. In addition to that, I would max out the escrow deposit. So here in Southern California, 3% is more or less the max. As we discussed, if it's a different amount in your area, then I would match it to whatever that amount is. I would do the escrow term as short as possible. So as we mentioned earlier, we said 30 days is pretty normal, but if you're able to do 24 days or 21 days, I would shorten it to make it as competitive as possible. Now, if the seller wants more time, they can ask for more time. But what you're trying to do here is set yourself apart from the crowd. Now, one thing I didn't mention a moment ago that you should be doing before writing any offers, if there's not offer guidelines, if you will, is your agent should be reaching out to the listing agent to have this conversation. Is there anything that the seller would like to see in the offer? What's important to them? Is there anything we can do to make our offer look more attractive? And the reason you want to do this is because a lot of times the listing agent will provide you with some information that you can do in order to make your offer look more attractive on paper. The next thing you want to do is shorten your contingencies as short as physically possible. Find out how quickly your lender can get the appraisal, how quickly they think they can get the loan approval, and if they can do that in 7, 8 days, 5 days, whatever the number is, shorten your contingencies to that period. Now, in some cases, maybe you have an appraisal waiver or your agent's able to tell you that, hey, this property is going to appraise, you shouldn't have any issues. In those cases, you might be able to say waive the appraisal or waive your loan contingency, but I wouldn't waive all my contingencies unless you know 100% that you're moving forward with that property, which most people out there don't know until they actually go through the process. So do what you can, but shortening the contingencies will likely put you in a better position. In addition to that, you might take things off that the seller might normally pay for, things like the home warranty. Here in Southern California, something that is pretty common is asking the seller to pay for termite clearance. Maybe instead you just ask the seller to pay for a termite report so that you can see exactly what's on there, and then you can decide whether or not you want the seller to pay for it instead of asking for it up front. But either way, don't do things that you're going to later regret. If you think for any reason that waiving the appraisal contingency or the loan contingency or shortening any of this stuff is going to put you in jeopardy of losing your deposit, then you 100% should not do it. Even if it is a competitive market situation, you have to do what's best for you, even if it means that you don't get the home. Now, I realize at the moment there's not a lot of inventory out there and there's quite a bit of buyer demand. At the same time, I also believe that there's not a rush to go out and buy a property. I don't think this is 2020 or 2021 where you're going to see home prices up 10, 12, 15% year over year. I think if anything happens, you start to see home prices move sideways more than anything else. So if you're looking to buy a house, you can find the right house and that's the house for you and you want to make an offer, great. But don't beat yourself up if your offer is not getting accepted, because I do believe there will be opportunities down the road. At the same time, if you're looking to buy a property, not sure what to focus on, do me a favor and check this video out here.